The world is watching closely as tensions between the United States and China continue to rise, shaking the foundations of global trade, politics, and financial markets. And while politicians and analysts debate over the next move, investors are quietly making one very clear choice: buying gold. Gold prices are exploding right now, and there's a powerful reason behind it. When global powers clash, fear rises, and in times of fear, people run towards safety. That safety is gold. In times of political or economic chaos, gold has always been seen as the ultimate store of value. It doesn't depend on any government or central bank, and it has held its worth for thousands of years. When people lose faith in paper currencies, they turn to something tangible, something that can't be printed or devalued overnight. The growing threat of a U.S.-China war, whether it's military or economic, is pushing that fear to new heights. Investors across the world are shifting their money from risky assets like stocks and currencies into gold, driving prices through the roof. Let's understand the situation. The U.S. and China are not just two powerful nations. They are the world's largest economies. Their trade relationship affects nearly every corner of the global market. But when tensions rise, trade slows, tariffs increase, and global supply chains are disrupted. That means higher costs for goods, inflation for consumers, and uncertainty for businesses. When that happens, markets get nervous. Investors know that inflation eats away at the value of money, so they start buying gold, which historically protects against inflation. This sudden surge in demand naturally sends gold prices soaring. Another key factor is the U.S. dollar. Gold and the dollar often move in opposite directions. When confidence in the U.S. economy drops due to geopolitical risks or heavy government spending, the dollar weakens. A weaker dollar makes gold cheaper for foreign buyers, leading to even greater global demand. The result: gold prices climb even faster. And with rising military budgets, massive debt, and a slowing global economy, investors are betting that the dollar's strength won't last forever. Central banks also play a huge role in this story. Countries like China, Russia, and even India have been quietly buying gold in record amounts over the last few years. Why? Because they want to reduce their reliance on the U.S. dollar in case of sanctions or financial restrictions during global conflicts. When central banks buy gold, it's not just a small move, it's billions of dollars being pumped into the gold market. That level of demand puts constant upward pressure on prices, no matter what the short-term market does. Another big driver is fear itself. Investors around the world are not just looking at charts, they are looking at headlines. Every new report about military drills in the South China Sea, trade sanctions, or technological bans adds more uncertainty to the future. The more unpredictable things become, the more investors seek safety. And right now, that safe haven is shining brighter than ever. There's also a psychological side to this. In the financial world, fear spreads faster than facts. When people see gold prices rise, more people rush to buy, thinking they might miss the opportunity. This creates a cycle where demand keeps rising simply because everyone else is buying. It's human nature to protect what you have when the world feels unstable. That collective mindset fuels even higher prices. For everyday Americans, this situation is both a warning and an opportunity. If tensions between the U.S. and China continue to escalate, gold could become one of the most valuable assets in your portfolio. It's not about panic, it's about preparation. Gold has proven time and time again that it can hold its ground when everything else falls. During the 2008 financial crisis, during the 2019-2020 trade war, and even during the pandemic, gold prices surged as investors fled uncertainty. Today's geopolitical situation feels very similar, if not more dangerous. We also can't ignore the inflation factor at home, with consumer prices still higher than before the pandemic and global shipping routes under stress. everyday goods are more expensive. If a full-scale trade war or even limited military conflict were to break out between the U.S. and China, those prices could rise even higher. When inflation spikes, investors traditionally move to assets like gold that maintain their value over time. That's why analysts say the current surge in gold is not just temporary. It could be the start of a long-term trend. Technology and sanctions are another flashpoint. The U.S. has placed limits on Chinese access to advanced chips and software, while China has restricted exports of key materials needed for green energy and tech production. Each new restriction adds fuel to the fire and shakes investor confidence in the stability of global trade. Every time confidence drops, gold gains ground. It's the same story that's played out for centuries. The greater the fear of conflict, the higher gold climbs. So what does this mean for the future? If tensions continue to rise, gold prices could easily reach new record highs. Analysts are already predicting that we could see gold push well beyond $2,500 per ounce if the situation worsens. But more importantly, the message is clear. The world is uncertain, and gold remains a timeless insurance policy against chaos. In short, the U.S.-China conflict has become much more than a political struggle. It's a financial earthquake that's shaking confidence across the globe. As long as uncertainty dominates headlines, as long as inflation remains a concern, and as long as investors crave security, gold will continue to shine brighter than ever. Whether you're a seasoned investor or just someone watching the news, remember this. In every crisis throughout history, gold hasn't just survived, it's thrived. And right now, that pattern is repeating itself before our eyes. 1. Gold becomes the world's safe haven whenever global tension rises. Gold instantly becomes the safest place for investors to store wealth. Unlike stocks or paper currencies, gold doesn't depend on any government or central bank. When headlines warn of war, sanctions, or market crashes, investors shift their money to gold because it holds its value through chaos. As fear spreads about a possible U.S.-China conflict, massive amounts of global capital are flowing into gold, driving prices higher. History shows that during every major crisis, wars, pandemics, or recessions, gold shines the brightest as a symbol of financial security. 2. The weakening U.S. dollar boosts gold prices. Gold and the U.S. dollar share an inverse relationship. When one goes down, the other goes up. As tensions between the U.S. and China grow, the dollar faces heavy pressure from government debt, defense spending, and inflation. A weaker dollar makes gold cheaper for foreign investors, causing more global demand. This surge in international buying power pushes gold prices higher worldwide, with the U.S. economy showing signs of strain and fears of global sanctions or trade collapse looming. Gold becomes the clear alternative to the unstable dollar, attracting investors seeking long-term stability. 3. Inflation fears drive gold demand. Geopolitical tension often triggers inflation, and inflation erodes the value of money. The U.S.-China rivalry disrupts supply chains, increases production costs, and makes goods more expensive. Investors, worried about losing purchasing power, turn to gold as protection against inflation. Gold has a history of maintaining its real value even when currencies weaken. As everyday Americans face rising prices for food, energy, and imports, gold stands as a hedge against inflation. The fear of future economic instability, fueled by global conflict, is pushing both individuals and institutions to invest in gold for safety. 4. Central banks are buying gold like never before. Central banks around the world, especially China, Russia, and India, are increasing their gold reserves at record levels. Their goal is to reduce dependence on the U.S. dollar and protect themselves from financial sanctions or currency manipulation during conflicts. This wave of institutional gold buying adds enormous pressure to global demand. When central banks move billions into gold, it sends a strong message to investors. The world is preparing for uncertainty. The U.S.-China conflict has accelerated this trend as nations seek protection in the one asset that transcends borders and politics: pure, tangible gold. 5. Fear and uncertainty fuel investor behavior. Markets aren't driven only by logic. They're driven by emotion. When investors sense danger, they act fast. The constant media coverage of potential war, cyber attacks, and trade breakdowns between the U.S. and China creates a wave of global anxiety. This emotional fear drives investors to buy gold in large quantities, believing it's the safest choice. As more people buy, prices rise even faster, creating a self-reinforcing cycle. Every headline about rising tensions, military exercises, or sanctions adds fuel to the gold rush, proving that emotion plays a massive role in gold's price explosion. 6. Gold protects against market crashes. Stock markets hate uncertainty, and geopolitical tension is the ultimate uncertainty. Whenever war or major conflict threatens the global economy, stock prices fall, but gold usually rises. Investors use gold as a hedge to balance their portfolios and protect against market crashes. The fear of a trade war or military escalation between the U.S. and China is already causing investors to move away from tech and manufacturing stocks into safer assets like gold. This shift in investment strategy strengthens gold's position as the ultimate shield during economic storms, driving prices to record highs.